What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had another bullish day in the stock market as we continue to push higher to brand new all-time highs. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. A quick reminder that my trade alert service that only trades the TQQQs is now live and it's called BANC Trade Alerts. Right now I'm running a 50% off promo where you can get 50% off your first month by using the coupon code provided. The BANC Alerts trade system is up over 26% year to date, non-compounded, and it's a very simple buy and sell trade alert service. Go check it out in the links below. And do know that if you're one of the first 500 members to sign up, you will get 50% off your first month if you do use the coupon code. Alright, so on SPY, we did go up 0.59% today, and we did break and close back above 425. Now we did gap up for the open, and that gap won't get filled until we go back down to 424. So that could be a critical support level if we do go down to fill the gap to potentially push back higher and break back above 425. Now do note, SPY did not close at brand new all-time highs today, but if I do switch this over to the SPX, you can see that we did close at a new all-time high. So remember, SPY paid out that dividend and it's not quite tracking the SPX very closely. So looking at the SPX, you can definitely see that things are looking very bullish, and it's very possible at these all-time highs that we could see a short squeeze. Remember, when you get a bull market with a lot of bears and a lot of skepticism, that is fuel on the fire and it could push the market higher and it could actually turn into a parabolic blow off top. So look out for that potential. And right now, you really don't want to be trying to short the market because there is still that potential that the market does want to push higher and you will see a short squeeze and it will be a very painful experience. So jumping back over to SPY, you can definitely see we have bullish price action and bullish trending. Even on SPY, which doesn't look quite as bullish as the SPX, we still have the full bull trend returning. Remember, we're coming off of a huge pullback after quad witching where we came all the way back down to the 50 EMA in a bull market. That's a strong support level, and that's why we see such a strong bounce off of that level. We do have the gap at 424, so be cautious that that gap could close. But remember, there's no guarantee of when that gap will get closed. We have plenty of gaps that have to get filled, but they're not likely going to get filled until the next stock market correction. And I'm talking about the gaps way down here at 411 and 400. So this gap at 424 is very likely going to get filled. But the question is it going to get filled tomorrow or is it going to get filled in a couple of weeks or months? So watch that gap closely because that should be a strong support level. Our price targets above are now 427. And if we break over 427, we're very likely going to 430. So two closes back over 425. And as I showed you with the SPX being at brand new all-time highs, we are definitely looking like SPY wants to go to 427. So that's the critical level that the short squeeze could send us to, with the potential of going even higher and getting all the way up to 430. Below the gap close support at 424, we still have support at 423 and the 20 simple moving average, which is going to be right around 422. Our most critical support level is still 420, but the higher we go, the more important 423 is going to start to become. We see the 20 simple moving average coming back up into that area, and we see SPY continuing to march higher. Do know the volume is lower, but it's completely normal to see the market go up on lower volume. Remember the saying, taking the stairs up and the elevator down. You don't need a lot of buying volume to send the market higher, but you usually will see a lot of selling volume that sends the market lower. So don't worry about the volume because if you're only paying attention to the volume, you're missing out and you're not following the price action. Remember, price action is king and the trend and the price action on SPY are still bullish. On the NASDAQ 100 triple Qs, we went up 0.62% today, and we did have a very bullish day. Again, we opened a gap that won't get closed until we go back down to 349, and we still see a very strong bull trend with the triple Qs. The next price target for the triple Qs is up here at 353 because we did break and close above 348, and we're looking very bullish on the price action. You could see we were getting a little too far overextended intraday, and we did see some selling into the close, but we still had a nice bullish price action close. So watch the gap at 349, and our critical support level is going to be down here right around 346. Below 346, we're very likely coming back down to 342. The 20 simple moving average is sitting right around 340, and it's continuing to march higher day after day, which means the critical support level at the 20 simple moving average continues to go higher. We see increasing volume today, but again, we still see relatively low volume, which is completely normal, and it's completely to be expected. So watch out for the potential of a short squeeze if we continue to see the price action marching higher. Eventually, those shorts will have to cover. On the Dow Jones, we see a bullish day today going up 0.94% and closing back over that level right around 341.7. We did open a gap below that'll get filled around 340. And the good news is for the Dow Jones is the price action's back over the 50 EMA. So this is looking a lot less likely that it's just a dead cat bounce because we do see the price action looking very bullish today. So this is good news for the overall stock market because remember I said you want to see all of the indices going bullish together and you don't want to see the Dow Jones going into a bear market while you're expecting to see a bull rally in the summer. So if the Dow Jones can now get back over that 20 simple moving average at 343, it will look a lot more bullish for the overall picture of the stock market. The downside supports are 341.7, the gap close at 340, and the 50 EMA right around 339. On the Russell 2000, we also had a bullish day today, going up over 1.4% and getting back over that $230 resistance level. Look for that level to now act as support, with our critical support level down here around 229. Below 229, we would be looking for support at 227 and the 50 EMA at 225. However, the Russell 2000 is getting back into that full bull trend, and the price action is starting to break through critical resistance. So look for the next critical resistance at 233 and 234, and above that we would be looking for brand new all-time highs at 237. Remember, all of the indices are looking bullish, which overall is a bullish picture for the stock market because we see the price action breaking through critical resistances across the board. On the Arkk ETF, we also see another bullish day, and we continue to see the growth sector looking very bullish. Technology and growth stocks like Arkk and QQQs are doing very well, and we saw Arkk going up 1.42% today. We got very close to that resistance level just below 128, and we did see a pullback. We do have a gap to fill at 124, but we are starting to see that full bull trend starting to build up. Just in a few more days, we'll see that 20 simple moving average crossing back over the 50 EMA, and that will confirm that Arkk is now in a full bull market, and it should continue to go higher for the rest of the summer. So watch that confirmation because it's very close to occurring, but do note the price action is key, and we've been having bullish price action ever since we continued to close back over the 50 EMA back in the middle of June. So the price actions over all of the moving averages, and all of the moving averages are almost stacked to the full bull side. Your critical support levels on Arkk are going to be 122, 120, and the 50 EMA at 116. On the VIX, we dropped over 2% today, and we continue to see fear leaving the market. Remember, the VIX is a measure of fear, and we continue to see fear going lower. We're back below that support level at 16.65, and we continue to see the VIX holding below that level for 2 days in a row. Remember, we need to see the VIX spiking into the 20s to possibly see a stock market correction, and we just don't see a sustainable VIX rally after quad witching. So as we see the VIX continue to get crushed, expect to see the market continue to march higher towards new all-time highs. On the dollar, we see consolidation over the 5 EMA, and the dollar is trying to build up a bullish trend. You'll need to watch the dollar very closely if you're going to be trading gold and silver because a strong dollar will send gold and silver lower. On gold, we're still consolidating around that support level at 1776, and below that, we're looking for support at 1761. Below 1761, gold's going back into the 1680s, but if it can hold above this level, we could be going back up to about 1829. Silver is also bouncing off of its support level at 25.8, but it is struggling to continue to go higher. We see silver just below the 5 EMA, but above that, it could go back to 26.5. Below support at 25.7, we could be coming back down to 25.1. On Bitcoin, we're currently up over 3%, and Bitcoin is starting to look more bullish. Again, we got that double bottom look off of 30,000, and we had a huge volume increase on buying. That's a bullish indication that buyers stepped in at a critical support, and we just can't seem to get Bitcoin to crack below that $30,000 support level. So if you zoom out and you look at the big picture, that's exactly what we saw at Bitcoin at all-time highs when it just couldn't seem to break above that $60,000 level. It was hanging around that level, and it was going sideways, and that was a warning sign that it was about to crash. Right now, we see that happening at the bottom, right near 30,000, and this is evidence that we see accumulation, and if we can't see Bitcoin cracking below 30,000, it eventually will regain a bullish trend and start marching higher. So right now, I'm becoming a lot more bullish on Bitcoin, and it is holding up above this resistance level right around 34,000. We still need to get back above this 20 simple moving average at 36,000, and eventually crack back above the 50 EMA, which is around 40,000. But overall, if you look at the bigger picture, this is a strong support level that's holding up, and we're seeing buyers stepping in. So until 30,000 breaks down, I'm bullish on Bitcoin. And if we do see 30,000 breaking down, look for the next support level at $27,000. On Amazon stock, we cooled off today, going down 1.56%, which is completely normal after a bullish rally like we just saw. We did have that resistance level right around 3,500, and that did trigger a little bit of a sell-off. We're back below the 5 EMA, but holding up above support right around 3430, and below that, we'll be looking for support at 3400. Overall, Amazon is in a full bull trend, and this could be a buy the dip opportunity, so look for support at 3430 and 3400, with the next price targets above at 3500 and 3552. On Tesla, we had another bullish day today, going up 3.5%, and at one point Tesla was trading all the way up there at 697. So Tesla is definitely looking a lot more bullish with 2 bullish price action days back over the 50 EMA. We see increasing volume on the buying, and we did open a gap below that won't close until we get back down to about 659. We did break out, but it could still be a false breakout, and we still could come back and close the gap at 659. Overall though, Tesla is looking a lot more bullish, and remember that I said Tesla would be bullish back over 633 for 2 or 3 days in a row. It does look like we are going to see that price action confirmation, so Tesla could be a great buy the dip opportunity off of 659 support or the 50 EMA support at 633. So watch those critical support levels, and do understand we still need to see Tesla regaining the bullish trend. So right now the price action is saying Tesla is bullish, but we still want to see the trend confirm that the price action is correct and it's not just a false breakout. But overall, this is looking like the real deal, so watch that gap close at 659. Upside resistance is going to be 692, 714.5, and above that we could start running all the way back up into the 760s. But don't look ahead, we still need to break above 692, and don't forget we have the gap below at 659. On Apple stock, we dropped 0.22% today, but Apple stock is still looking very bullish. The price action's over a positive sloping 5 EMA, and we're very close to getting that 20 simple moving average crossing back over the 50 EMA. All of these moving averages are positive sloping, and all of these moving averages are about to be stacked to the full bull side. So I'm very bullish on Apple, and I do think Apple is going to continue to march higher. Our upside price targets are 135 and 137, with downside support right around 133, 132 breakout level, and below that we still have support right around 131.8. So there is a ton of support just below the price action, and this does look like a very bullish opportunity for Apple to start running. Watch those critical levels though, because if we start breaking below 130 to 131, we could be coming all the way back down to about 129. On the financial sector, we're going up 1.25% today, and we closed just below the 50 EMA. If we can see the financial sector getting back over the 50 EMA, that will be a bullish development, and it will be overall bullish for the rest of the stock market. On the industrial sector, we went up 0.78% today, and we did see the industrials closing back over the 50 EMA on increasing volume. So this is a very bullish indication, and it could be a hint that the financial sector is about to do the same thing. Watch the financials and the industrials, because they are the possible dead cat bounce sectors, and if they are going back into a bull market, that's going to be extremely bullish for the S&P500 and could help push SPY up to 430. On the healthcare sector, we are up about 0.5% today, and we continue to see the healthcare sector closing over the 5 EMA with a full bull trend. The healthcare sector does look bullish, and it does look like it does want to continue to go higher. The energy sector was up 0.86% today, and it's continuing to close above all the moving averages. We're very close to having a full bull trend back in the energy sector, and we could be breaking out to new all-time highs. So jumping back over to the S&P 500, don't forget that SPY and the SPX are at completely different price action. Overall, the SPX is more accurate and it's at all-time highs, and this could lead to a short squeeze in SPY. So this is not the time to be trying to call a top or trying to short the market, because the market can and probably will continue to go higher. Watch price targets at 427 and 430, and the gap closed below at 424. Remember, if you're getting nervous in the market and it's a bull market, you're better off going to cash than you are trying to short the market. It's much safer to have cash and try to buy the dip in a bull market than it is to try to call a top and try to short a bull market. Also remember, Bank Trade Alerts is live, and it tells you exactly when to buy and sell the TQQQs, and it's up over 26% non-compounded year to date. You can find out all of the information about Bank Trade Alerts in the description below with a 50% off your first month promo coupon code. Also remember, there's a Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market, and I'm bringing you new trade ideas to help you crush this market. All of the links are in the description below, so go check them out. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.